Jeremy, it is such a delight to be here with you this morning, and I want to just thank you for taking some time to contribute to our What I've Learned series. So you may know that we started this a couple of years ago to highlight and capture the legacy of some of our most esteemed faculty members. So the first person we did was Anita Summers. You are now our second guest, and I'm excited for our conversation.
Well, I'm honored to be your guest on this show. Thank you, Erika.
Thank you. So let's dive in. And for the benefit of our audience, I'd love to just have you walk us through the beginning. How did you come to this point in your life where you are so regarded and respected as sort of the world's economist?
Wow. Of course, it's the beginning of the beginning. My mother always stressed the importance of education to me. Both my parents went to college. I grew up in the Chicago area, actually, and they really thought that getting ahead is very important on education, and that was what was stressed. I was good in math. I was interested in the stock market, but interestingly, from a different point of view than many of the others. I was interested in what made the market go up and down more than let me pick a stock that I'm going to make a killing on and do well. Mm-hmm. And back in high school, it's so very different today. Back in high school, even at the best in the country, there was no economics classes. That was considered a college-only class. And in fact, interestingly enough, not even a freshman class. When I went to Columbia as my undergraduate, it was the first time you could take it was a sophomore year. I didn't take it until my junior year. But after 2 weeks, I knew I wanted to be an economist. I always knew I wanted to be a teacher. So I found my subject, and it was just a matter of trying to get into the best place I could.
So you always knew you wanted to be a teacher. Where did that interest come from?
I always, when I was even really small, like in high school, and even before high school, I loved to tutor kids. I mean, if they were having trouble with their math or they're having trouble with chemistry or whatever else. And I remember I was $5 an hour, and I will tutor you for an hour to help you before a test. And I love doing it. I love trying to explain and get that response. And I like being up before. I was never afraid to be up before crowds. And I remember one of my classes in high school was called speech. And I don't know if they have that anymore.
They had it when I was in high school.
They did,
I took a speech class.
And everyone else was like, oh my God, I have to get up before the class. I got up, my topic was, what caused the stock market crash of 1929? As I read Galbraith, I read some of the books about the stock market crash. I was interested, and I loved giving it. I mean, had a few charts and everything like that. And I've always enjoyed lecturing, and I've always enjoyed explaining different problems to people.
All right, so Columbia for undergraduate, MIT for graduate school.
MIT for graduate school, yes. If you were good in math and good in economics and want to go to graduate school, MIT was actually the place. I was so honored. I got a call from Paul Samuelson. I was in my dormitory in senior year, and I had applied to a number of schools, and I got into MIT, but I didn't respond right away because there were other good schools. And I remember Samuelson saying to me, he said, Jeremy, this is Paul Samuelson, he said, we sent out the invitation 2 weeks ago, and you haven't said yes yet. So we're wondering, is there something wrong with us at MIT? I said, oh no, I just sort of delayed. I'll get my applicant. Okay, that's good. We would like to see you there. So I went to MIT. I loved it there at MIT. Mm-hmm. Spent 4 years. I did 1 year postdoc at Harvard, actually under Marty Feldstein, who was the chairman of Council of Economic Advisors subsequently. And my first teaching position was the Graduate School of Business at the University of Chicago, where I Spent 4 years, 72 to 76, until I came to Wharton.
So you've been at Wharton since 1976,
19
almost 50 years.
Almost a half century. It's almost unbelievable.
So I'd love to, as someone who is relatively new to Wharton, I've only been here for 3 years, what was it like then, and how have you seen the school evolve in that period of time?
So many changes. Of course, it was only Dietrich Hall back then when we were talking about the Wharton School, and that what I guess was built in the 50s, so it was already aged, and it was a pretty old hall. We had tiny little offices, I remember, and we had classrooms that were all about 42 with fixed desks. It's nothing like what we have today. But outside of that, now it is important. I think about 2 years. I came in '76. 2 years before I came, economics and political science used to be in the Wharton School, and then they did what many other liberal arts, economics and political science. They moved out into the liberal arts school. So it was more conscious, but we had a good economics division, and particularly macroeconomics is what I was interested in. My PhD actually, Erika, was not, people say, did you get a PhD in finance? And the answer is no. I got a PhD, and I think this is interesting. I got a PhD in economics, monetary theory and policy. And they said, well, why didn't you go to finance? I said, when I went for my PhD in 1967, finance was hardly a subject. I mean, all the great theorems, the capital asset pricing model, Black-Scholes theorem, and all that really got developed subsequently. So people told me, if you're interested sort of in the stock market, go in economics at that particular time. And really, the field of finance blew up while I was doing that into now. If I were 10 years younger, I probably got my PhD in finance and not but I never regretted the macro because I think that gave me a really important perspective that I don't think sometimes people who just do their major in finance or get a PhD in finance sometimes have.
So then you were here to see the evolution of the Wharton School become this behemoth and have this tremendous legacy in finance, but the root of that, what I hear you saying, was really in economics.
For me, it was in economics, and they needed economists because we required macroeconomics as a course, and actually in the first few years there, we were very integrated with the economics department. Even though they left the Wharton School, they taught some of our students. I taught a number of their students. So there was a big difference. Of course, as you know, it used to be called the Wharton School of Finance and Commerce, and of course, then it got dropped because it became so much broader. I mean, it has grown enormously. And in prestige. I would probably, say Wharton was having a hard time breaking into the Harvard, Stanford, Chicago grouping there. We were right below it. But then as we came, and particularly under the deanship of Russ Palmer, who was came when I was here, really the push for excellence that brought us right up into that top grouping.
Yeah. Well, we have you and your colleagues from the time to thank for that, for sure.
Thank you.
So as you have reflected on your life as an economist and on your life as a Wharton Faculty School professor, how would you describe your greatest achievement or accomplishment in the field of economics?
Wow. I mean, I would say the most influential work that I ever did was the book Stocks for the Long Run. And actually, it was very interesting. That really came out of a project I was doing with the late Professor Marshall Bloom, who is one of our most prominent professors. He actually called me up and said, Jeremy, the New York Stock Exchange is having a 200th anniversary. They want us to do some history. I know you're interested in the stock market. I said, I'll take the data part. I went all the way back to the beginning of the 19th century looking at data. I wrote a number of academic articles to be gotten in journals and came to some conclusions. And then a lot of my colleagues began to say, Jeremy, you could turn that into a book. And I said, maybe I will turn that into a book. And I turned it into a book, writing in the late 1980s, got the book out in the early 90s. It finally hit publication May of 94, the first edition. And the reviews were just really pretty spectacular. And it sort of took off from there. I just finished the 6th edition of that book. We've sold, not almost 500,000 copies through these 30 years of that book. Not as much as Burton Malkiel's Random Walk Down Wall Street, but the person and the book I admire. In fact, I think a lot of times I said I'm writing that book because I wanted a book to read, for students to read after they read that famous book on law. I think he's sold a couple of million, but it's really had an influence. And I've given talks around the world on topics related to what is in the book and how it relates to the current events.
Well, I want to stick with that topic of the book, Stocks for the Long Run. When you wrote it, you argued that long-term investments in stocks were better than, say, gold or bonds. Do you still think that that's the case? And tell us more how your thinking may have evolved or why it hasn't evolved.
Well, what you said is absolutely right. But a lot of people had thought that would be the case, and that was confirmed. What I went a little further and showed that over periods of 20, 30 years, often 10, 20, 30 years, particularly once 20 and 30 years, not only did stocks give you a higher return, but they were less volatile. Now, we now all know how volatile stocks are in the short run. But in the long run, a lot of the ups and downs even out, and they become more stable as long-term investments. And I think that really was what caught so many people by surprise. So if I don't get panicked at the ups and downs of the short-term market and keep it in, I actually have a better chance of realizing higher returns. Higher returns and lower volatility is like having your cake and eat it too, right? That was really what resonated. Is it still going to be true? Yes. I don't know. I'm projecting returns in the future on stocks a little bit lower than my historical levels, and we can talk about that if you want, but still far above bonds, gold, the dollar, and any other broad investment class.
Right. So economics, as you know, is a social science. My field is in psychology, another social science, and I think the two are very similar because it really is understanding human behavior. So as you think about and work with your students, or when you are featured on CNBC and you're talking with people, how do you capture the psychology associated with investments and making decisions connected to the stock market?
I think psychology is hugely important. My very good friend Bob Schiller, who from Yale University, really almost pioneered what's called behavioral finance, which shows you that it's not just the analytics, but also the psychology that causes people, and a lot of people, to make investment mistakes. And I recognize that, and that's why you have this short-term volatility. People get over pessimistic in the short run when things go bad, and they get over optimistic, in the short run when things go good, and then it reverses. So you have this short-term momentum, but I think it was actually Warren Buffett who said, yeah, in the short run, the stock market is a voting machine, but in the long run, it is a weighing machine, meaning the fundamentals will come out. you won't be able to hide in the long run. I try to stay really focused on those fundamentals and try, I think I do my best when I give lectures in bear markets to keep people calm and in the market. And a lot of people have thanked me. They said, I was ready to get out. I was so upset. I heard you and I stayed in, and I'm very pleased that I did.
Well, let's pick up on that theme. So in my own background, I studied crises.
Right, I know that.
And when I started as dean of the Wharton School, it was the first few months of the pandemic, which was a very significant crisis that the world faced. And thinking about my role and responsibility as a leader to help navigate Wharton through that period of time. You are sort of the go-to person when it comes to thinking about the stocks, and the stock market has been volatile, as you've indicated, and there have been times when we have experienced crises in that regard. How do you help navigate people through those? So I want to just pick up on what you were describing earlier.
Yeah, and that COVID crisis actually caused the fastest bear market in history, actually. I mean, it came on so suddenly. We all remember, the middle of March, and in the next 3 weeks, it was the strongest, sharpest bear market. I was on many times on CNBC. I said, pandemics come to an end. We looked at the Spanish flu. This is definitely going to be a shock. And I even talked about if there's a year that people don't have earnings, that if you take a look at stocks, now stocks are long-lived assets. They're infinitely lived. So even 1 year or even 2 year of poor earnings, as long as we rebound, should not tank the market anywhere near the 30% that happened. I said, I don't know how far it's going to go, because you're right, that psychology was, I said, but long term, we're going to solve that. We're going to get a vaccine. I was very optimistic that we were going to develop a vaccine. And I said 2 years from now, we're going to be largely back to normal. So, if you do the math, 2 years even of poor earnings, we did go through a recession that was even short. It was a short one. It was even not as bad as even I had feared. I said, looking beyond that and plugging that into all valuation formulas, you're going to get great returns if you buy right now, even though things look bleak.
They definitely looked bleak for a while, but I think it's so ironic or interesting that your optimism in us finding a vaccine, actually, as you know, the mRNA technology
was here.
For the vaccine
University of Pennsylvania.
Absolutely.
I was following it very, very closely, and to be to get vaccinated. I know some of the doctors were vaccinated in December of that year, but many of us, very older people, got vaccinated in January and February. You're talking about less than a year into that, and saved millions of lives, to say the least.
One of the things that is a topic of conversation and has been people have been very vocal about this recently, and that is the sort of increasing wage gap and income inequality, that wealth gap that exists between people within this country and certainly around the world. What do you identify as some of the root causes for that kind of extreme inequality that we're seeing?
I think what's most important, and people could talk about the gap, I think what I would love is the people at the bottom, in the middle, to go up. Mm-hmm. I'm not going to begrudge the billionaires. Mm-hmm. Some of them made incredible contribution. What's important is that we bring the people at the bottom up, that we give them the opportunities, that we have an educational system at the lower level, at the higher level. Wharton is the pinnacle. I was privileged. I came from, as I said at the beginning, my mom, education was everything, and I know a lot of these kids, they may be smart and they go back home and the education is not important to the kids. They've got to be in an environment that they can flourish, mm-hmm. and both before school and after school and during school, and be among peers that feel the way that they do in terms of it's worthwhile to gain the knowledge, because I think there are opportunities out there.
So you are known as a prognosticator of the future.
They call me a guru, and I tell people there are no gurus, really.
Well, you may be the exception to that. But if we stick with this theme around the wealth gap, what happens in this country if we don't find ways to eventually close that wealth gap, or in your words, bring the bottom up? What's the long-term prognosis?
The long-term prognosis is not good. I mean, I think that's essential for any country to survive. I think the U.S. would lose status around the world. I mean, I think back in the 60s, I mean, I look at statistics. I came from public high school, a good one in the suburbs of Chicago. And, the public high schools were very highly regarded, and the SAT scores were very good, and the achievement levels were good. And on an international scale, the United States was like in the top 10. Now, on these international things, we're in the middle or the bottom, which is appalling. We are at the top in graduate education, and Wharton and all the grad college is another problem, but on graduate education, we're the top. When you go down to the primary and secondary schools, that's where we are falling down, and have fallen down, I think, over the last half century. And that's where we have to bring ourselves out. You can't have poorly educated population and expect to get the opportunities and be the type of country that you want to be.
Yeah, I agree with you. As someone who has been teaching economics for nearly 50 years, how do you keep your teaching, your ideas, your curricula fresh and innovative for students? Because, the field has changed pretty dramatically. And how do you remain relevant and innovative in the content that you're sharing?
Well, I think that this is what I think was very unique about my classes and worked out very well. A few years after I came here, I started out teaching only the undergraduates and the PhD students, not MBAs. And the chairman of my department brought me in and said, Jeremy, I want to talk to you. I've heard that you've been teaching some classes at JP Morgan, the Morgan Finance program, and you've been mixing market information in with real serious material and all the rest. We're not, I'll be honest with you, our MBAs don't like our macro class. They think it's too theoretical, it doesn't match it. Would you think about developing a class where you mix what's going on in the financial markets in with macro? I said, I'd love to. That's what I'd love to do. And I worked on developing that class. The first 20 to 30 minutes of every class, I go through what's going on in the markets. Stock market up and down, dollar up and down, bonds up or down, interest rates. Why does that happen? How does that mesh with what we're teaching? Does that correspond to the model that I'm building for you in terms of trying to understand the interconnections between all these important variables? And that caught on. That became all of a sudden the ratings were really great for macro. And my classes expanded from 40. And when Steinberg came in to donate money to make Steinberg Dietrich what we know today, and it was 150 in the classroom, that filled up. I once had to teach in Go6, which was how many
Our
people?
largest classroom.
350,
yes.
Largest classroom, 350. One person said, Jeremy, someday you will have to teach in Franklin Field. And I said, well, I think that's too many. But that's what mixing in the current events with the theory you're teaching so they don't seem disconnected is really what gives the people the motivation. And as you probably had heard, I used to allow students, a lot of people said, Dr. Siegel, I'm not taking, I took your class last year, I'm not taking this year, but could I sit in on the first 20 minutes of your class? And I said, if you stand quietly in the back, and then I had a group of people, but they were quiet and they were really good and serious, and I would allow them in. Now that we have the internet and the fact that it's filmed, they don't have to come to the class the way they did, let's say, in the 1990s and after that. But I used to have maybe up to 50, 60 come in for those first 20 minutes, which was called the Market Review by Siegel, and many of them that were really interested in finance used to do that. But again, what made it a success was combining the theory with the practice, with combining an explanation of the markets. Because before that, macro was just, a lot of the people that developed macro years ago really weren't interested in the stock market and financial markets. They thought it was very separate. And I said, no, they're connected, and I'm going to try to show you what those connections are.
Well, there have been generations of students who have benefited from your bringing together the markets with the theory. So thank you for that. Let's stay with our students for a minute. Again, you've been at the Wharton School for a long time. You've seen students come and go.
Yeah.
How do you describe the student of today versus the student of maybe 30 or 40 years ago? What's different about them?
Well, in a way, the Wharton students, I think, have kept on getting better and better. And that, I get a lot of, I have colleagues at other universities who say, oh, aren't the students getting worse? And I said, well, I do hear that from other places, but it's not true of my students for Wharton. Now, where the challenges come, I think is in the MBA system. This is what changed the most. Now, remember, I taught my first 4 years at the Graduate School of Business at the University of Chicago. We took the youngest of all. Well, actually, the average person was out from college only 2 years. Believe it or not. And we took a big contingent that just got their BA degree and went right to the Graduate School of Business. So they were very, very interested. Now, as time has gone on, at all schools, as you know, the age has gotten higher and higher. Now, as the age gets higher, these people have families, they have professions. They get farther away from, oh God, I thought I left final exams
Right.
8 years ago. So I think to some of them, it becomes more challenging than it was earlier when they were closer to the undergraduates to do the same type of rigorous work. Although Wharton is so selective, we still get the best and are able to do that. But what I hear at other schools is that's not happening as much. So that is changing because I think of the increase in the average age of in the MBAs. The PhD students are still, very serious, and as I said, it seems as the Wharton undergraduates just get better and better. I've been honored because I've always taught an honors class, and I always said, wow, the honors students of Wharton are the best in the world.
Our undergraduates are absolutely incredible.
Without question.
For sure. So as a dean, I'm constantly thinking about how to position the school for ongoing and continued success, and the curriculum is a part of that portfolio. Are there things you would advise me in terms of how we should be thinking about the curricula and what's relevant, what content, what topics should we be focused on now?
Yeah, look at how much is new now. Look at ESG, and which was totally, came out of nowhere. In fact, in the 6th edition of my book, I have a whole chapter on ESG. It wasn't before. In the 6th edition of the book, I have a whole part on cryptocurrencies, which was never before. I think the departments have taken the lead, and many of them gotten the courses. It gets slower to be added into textbooks and the more traditional things because you're used to doing that. But if someone that's you got to know where are the research topics going. They're always changing. Pro and con. There's a lot of controversy about ESG investing, but there's a lot of really good analytical work that's been done on that, free of some of the politics that often surround that issue. So yeah, I mean, you always have to be aware, and I think Wharton has been good at being at introducing new topics that others are talking about early on. So it's important to continue that trend.
So artificial intelligence is one of those new
buzzwords, shall we say?
I think it's more than a buzzword at this point. How do you think about that, and what role might that play in affecting the markets?
That's exploded into the marketplace right now. I myself, have been thinking about it, and I'm getting, all the manifestations of it. Now, again, it's. I think two things. First of all, ChatGPT, obviously number one, but very recently, one of the biggest chip designers, NVIDIA, came out with explosive earnings. So this sparked Wall Street. I mean, okay, you can talk about all these innovations, but do they make money? Ooh, well, this chip may bring money. Now, the thing is, that's stage one. It's often like, they're providing the nuts and bolts, but those people who are paying for this have to be able to charge more for, in other words, they have to provide a service in above that I'll pay. Oh, I'll up my pay because I'm going to get that much better service for what I need. That's more challenging. I mean, and now everyone says, I want the chips. I want the best chips, so NVIDIA is going to do extraordinarily well. The next thing is, how much more can I charge for those chips, and what about competition and all the rest? It reminds me, in a way, but at not the crazy level, but in a way very much at the beginning of the internet of 1998, 99, when everyone, the internet was going to change the world, and anyone who had a .com at the end of their name, went to 1,000 times earnings or non-earnings. In that
most
case,
of them aren't making
now
anything.
NVIDIA is a profitable company, so we're not. This is not. Some people are saying this is nowhere near the craziness. I was here during the craziness, so I remember it. So this is much more solidly. That doesn't mean these things can't get overvalued. They often do. Whenever new things come, there overexcitement. When that pace will be is another thing. But these are the sort of things that happen and push the world forward. AI has challenges. I think it could be used for teaching. I heard of one professor who said that his classroom got much better because he used ChatGPT to answer questions and then ask the students to say what was wrong with the answer that ChatGPT did. And that was challenging for them because they had to look for the right answers. So in a way, you have to be really careful. It can do a lot of things, but when it has to be really precise, sort of like autonomous driving, you don't want to be 98% right.
Right.
Yeah.
You want to be better than that.
ChatGPT is. I don't even think it's 98% right. So I mean, it gathers a lot of information and summarizes it very, very quickly. That's already on the web. We know there's a lot of bad information on the web as well as good. It does some job at curating that, not a lot. But these are, the challenges that any new technology is going to have to face in the future.
Yeah. Well, I tell you, Professor Siegel, the impact that you have had, not only at the Wharton School, but certainly at the Wharton School, but the impact that you've had in the world with your great mind, your ability to communicate your ideas, your passion for your subject matter. Really, we are better for having known you and interacted with you and had the privilege of working with you. So thank you so much for spending time with us.
And I want to thank, Wharton for allowing me to use my talents as effectively. I mean, it was the best place for me to be without question, and I really cherish those years. Thank you.
Thank you.